State Mortgage. I thought I'd take a few minutes and give you some strategies as a realtor or a buyer and seller. This is a scenario that I worked up this morning. I thought it could be relevant to a lot of folks out there. So this particular client is looking to do a few things. Number one, they want to combine households with her parents and increase their space and update the living space as well. So parents are getting elderly. Sometimes this makes sense for a lot of folks. But in order to do that, she's got to make sure that her payment doesn't exceed this $1,800 a month. So the current home's value that she'll be selling is going to give us $345,000 to play with on the scenario to see what makes sense for them. The home that they want to make an offer on is about 1,000 square feet larger, so it does fix half of this, and then they're going to need about $50,000 to update the new home. So that's the scenario there. And then this client happens to be a veteran. I'll explain that more, but basically there's a little bit of difference between a VA loan buy downs and conventional. Typically the veteran, if you have that option, should always look at pricing on that because it will be typically cheaper in the market. This scenario works for conventional as well. The next section here, we get into the formula. Sellers, I would just tell you, look at the opportunity to lower your buyer's payment versus the sale price. Both of those will impact the monthly payment, which is typically what a buyer is the most concerned about. Don't just lower sale price without considering incentives where you cover a buyer's fees to pay down the rate. Buyers, you can lower your payment primarily two ways: lower interest rate or lower loan amount. So those are obvious, but what's not obvious is sometimes you can get a lower payment by a higher loan amount, lower interest rate, and we'll explain that further in this. Discount point is the cost to lower your rate. Rule of thumb on this is typically 1% of your loan size will reduce by a quarter point. So, for example, if you have a $500,000 loan at 5%, if you pay 1%, $5,000, you can drop the 5% rate to 4.75. That's a rough rule of thumb. So let's get into this particular scenario that we worked up this morning, and I'll kind of tell you this. This is the breakdown. So we're going to offer $545,000 full offer, but we're going to ask the seller to pay $10,000 towards the buyer's discount point. Okay, if we do that, that's going to give us a 5% rate, and that 5% rate with a down payment of $295. Remember, I told you they had $345,000 equity after their sale, the proceeds from their sale. So I'm leaving $50,000 in their checking account and taking $295,000, which is going to give me a net loan amount of $250, is what we're going to borrow to make the purchase work. So when a client is telling me $1,800 a month, I've got to back all this out: taxes, HOA, insurance, and look for a principal and interest payment, in this case $1,342. And it looks like I'm able to accomplish what they're looking for, which is a payment below $1,800 and some money in their pocket for the renovation. So the thing I want to show you is this table right here. This is the discount point table. So don't want to make you too confused here, but this is the rate, and you can see it's going down. It starts at 0 points, which means we call par. 6.487% is par. That has a payment of about $1,641. This is the principal and interest payment. As we go down, I ask the seller to pay $10,000. So sellers, instead of just dropping your price $10,000, look where that money may be better used. So for $9,200, I can take that payment down to $1,395, which is a 5% interest rate. That is the scenario that I worked up here, and that told the agent that was submitting the offer, asked the seller to cover $10K. that got me below my target price for the buyer. And what I want to show you now is I'm going to now go to the buyer and say, hey, instead of loaning you 250,000 and we had the seller get us to 5, why don't you borrow another 5,800 from me, and then I'm going to give you a rate of 4.5. Okay, this is, you got to think outside the box sometimes in a market like this. That I can tell the client, by borrowing more from me at a lower rate, I'm actually going to save you another $46 a month, or 16,000 over the life of the loan. So that is sometimes a deal sweetener that makes it even a better no-brainer for the buyer to make the move, this, to sell their home, because instead of at 1,800, I'm now offering you 1,739, and the scenario is the same except for the rate is now there, and my loan amount is $5,000 more. So I hope that helps you today on some of the strategies you can use to make money work for you. We'd love to talk to you about your specifics, whether you're a realtor or a homeowner looking to make a move in the market. And in this particular scenario, we were able to get her payment lower. She's going to add another 1,000 square feet, and she's going to have parents enjoying their golden years, and make it a win-win for the neighborhood as well, versus just dropping the sales price another 10K. Let's use that money and help the other neighbors, and it could get you more listings because you're maximizing those sale prices versus just dropping them. All right, hope you have a great rest of the day, and reach out to us if you have any questions on your scenario. Thanks.